The South African economy avoided a technical recession in 2024. The economy grew by 0.6% in the year's fourth quarter after registering a contraction in the third quarter. But the question remains whether this growth is sufficient to boost budget revenue in the medium term or whether economic interventions by the Government of National Unity should be intensified. Business reporter Ntokozo Khumalo has that story.
A disappointing growth outcome in 2024, but business is remaining cautiously optimistic that GDP growth should accelerate towards 2% in 2025-26. That was the message in FNB's industry note by senior economist Thanda Sithole. After Statistics South Africa announced that the economy grew by 0.6% in the fourth quarter of the year, resulting in annual growth also standing at 0.6%. The optimism, according to Sithole, is rooted in several factors that the bank believes will support the economy in the medium term.
Inflation is expected to remain stable and low, which means that there will be some space for monetary policy to ease further. That should provide some support to the consumer as well as investment. But secondly, the two-pot retirement savings withdrawals are also expected to temporarily support or boost consumption over the near to medium term. And then thirdly, structural reforms are progressing well, particularly in areas of electricity and logistics.
Despite the optimism, there are threats to this growth that needs to be tackled head-on. Only 3 of the 10 economic industries managed to expand over the quarter, with the remaining 7 in the red. Sithole points to deeper bottlenecks in the economy that need to be removed.
It was finance, agriculture and trade that supported economic growth. The weakness that we saw in other sectors, particularly construction, manufacturing and electricity, reflects structural constraints that are affecting economic activity currently. So that really is a concern. And it requires that we continue to implement economic reforms to try and make sure that these bottlenecks are actually removed.
While the 2% growth forecast by FNB in the 2025-26 period is encouraging, it remains short of the kind of growth required to boost business and consumer confidence and lower unemployment. Sithole adds that the stability of the Government of National Unity and the effective implementations of its policy priorities will be critical to sustain growth.
We need more growth. We need about 3.5 and above sustainable growth over the medium term to make sure that we improve our socio-economic indicators. As far as the GNU is concerned, I think its stability is going to be very important. We know that we've got Treasury faces a lot of several risks. Some of these risks are external, related to what is going on in terms of global fragmentations, but also domestically we've got rising spending pressures. We've got elevated levels of unemployment and poverty. So the budget needs to strike that balance, ensuring that there is continued support for the poor and vulnerable households, and that there is increased expenditure on infrastructure to support economic growth or potential growth.
Finance Minister Ntokozo will table the budget on the 12th of March at the National Assembly in Cape Town after it was postponed last month. For Newzroom Afrika on Channel 405, I'm Ntokozo Khumalo in Johannesburg.